estate. It's one of the biggest asset classes in the world, hundreds of trillions of dollars. It's all over the place. And it was one of the first use cases back since 2017. So I've got an incredible group of panelists here. I'm very excited. We're going to have Matt Ong, the CEO and co-founder of Ctrl Alt, Ed Nwokedi, the CEO and founder of RedSwan. We have Mitch DiRaimondo, who is a PM of SteelWave Digital, Brian J. Esposito, the CEO of DiamondLake, and last but not least, the co-founder and co-host of the Old Men, New Money podcast, Phil Larmon. So let's give a round of applause for this great panel here. Come on up, guys. Mike's are in the chair.
Let's have some fun.
All right, everyone. I'm Phil Larmon. Good day to you. I'm the co-host of Old Men, New Money. And as you can see from all the gray hair, we're a little bit older, so we've been around the block. And my goal today is, we're midway through the year. We're day 3 of the conference. I really want to peel it back and be able to provide value to you that is a little different, right? I asked the panel to let's dig deep. Let's talk about the good, the bad, the ugly, the misconceptions, and what needs to be done, what is within our control and what is not. And so this topic really hits close to home for me because back in 2018, I was the head lobbyist to get video notarization passed in the state of Ohio. So I've constantly been looking to see how can we get more efficiencies and how can we impact either transactions or trading of real estate. And so I thought back then, well, blockchain is going to play a very big role in this. And so we're lucky today to have folks on the panel that have been in this space for a very long time. And so I'm going to actually let them introduce themselves and give a little bit of background on themselves and the company, because I think it's important that you have a perspective on the way that they're looking at this and the way that we talk about it today. So, Brian?
Absolutely. Thank you. Great introduction. And I just want to say Herwig and Jason have done an incredible job. I've been to a lot of conferences, but the group and the community and the information being shared here has been spectacular. So great job, guys. So Brian J. Esposito, CEO of DiamondLake. Quick overview, 25 plus years as an entrepreneur, building, starting, acquiring companies across 25 different industries. So over 115 companies in my holdings. I've been heavily involved in tokenization for over 13 years, but in a regulated environment with the regulated mindset of how do you do this and not get in trouble with the SEC as a US citizen, and how do you do this and not get any banking restrictions or debanked. So I got heavily involved, not as a speculator buying Bitcoin or Ethereum or anybody else's projects, but in my mind, how do I incorporate tokenization, blockchain, and real-world assets into my own companies and holdings? And that story and that evolution, which I met Herwig a long time ago, we actually did some great work together with the security token offering, led me to take over DiamondLake because I believe that was a missing piece in connecting the wealth of the world, the understanding of how do you get access into tokenization through a vehicle such as a public company. So our entire focus is boosting balance sheets, working with great companies, acquiring great companies, working with exceptional management like Mitch over here, and just old school boosting balance sheets, earnings, rewards, and having tokenization built into our business model.
Yeah, no, I'm Mitch DiRaimondo, founder of SteelWave Digital and ECI. Kind of similar to Brian, I got involved pretty early, back in 2017. We were trading volatility, classic crypto story. Saw the good, the bad, the ugly. And when I graduated in 2020, I was like, look, if we can bring in really institutional product, we can bring institutions to come play in the space. So my father was founder of SteelWave, and I go to him, I'm like, look, if your real estate could come in, regulators could underwrite this, but more importantly, your international players could start deploying institutional grade capital into it. And that's kind of what we set out to do, is provide the best product the space could get. And we've been doing that since 2020. Seen a lot of evolution in the space, and then at the end of last year, beginning of this year, we merged together with DiamondLake because we saw the value of the public offering vehicle, right? Where it's like, look, we can now take a private investment and put it into a public offering where people who previously couldn't play start to be able to play. So yeah, it's kind of been the mission we set out to do, and we're pretty excited to be leading that push.
Good morning. I'm Nwokedi. I'm the founder and CEO of RedSwan Digital Real Estate. Prior to RedSwan, I was executive director of real estate for Cushman & Wakefield in Texas, where we did multiple $1 billion worth of transactions. I left because I felt that there was a lot of competition in that space, and I saw a new opportunity with blockchain technology. So with RedSwan, we helped transition institutional real estate in a compliant manner with securities going on chain, then also helping with the capital formation needs as well. Currently, RedSwan is the leading company with assets on chain, real estate assets on chain. We like that position, but we think we're going to outbid ourselves or outdo ourselves by the end of the year. But it's a very exciting space. Happy to be on this panel. I think there's a lot of things we're going to talk about. And I hope that I can ground it with real life activity on chain with real estate as we interact with institutional leaders. Thank you.
Hi, I'm Matt. I'm the founder CEO of Ctrl Alt. Our mission is quite simple. We want to bring alternative assets on chain. So that covers everything from private credit to real estate. We believe that these are the clunky parts of the asset universe and most ripe for disruption with blockchain technology. We're known for some of the real estate projects that we've done in the Middle East, for example. If anyone's seen what's happened with the Dubai government bringing title deeds on chain, we were behind that. We tokenized the first house in the UK. And so I guess I'm on this panel to give a global perspective on real estate tokenization.
So real estate, obviously, massive, massive market, right? And so we've got representatives up here that can speak about it from a US domestic standpoint, but also internationally. I think the trillion-dollar question is we all maybe thought that tokenization of real estate would be a little bit farther than what it is today. I'd like each of you to give your perspective. I was like, why is it not, right? Because it makes complete sense to us, and it makes complete sense to maybe some of the people that understand the technology and the efficiencies. Why hasn't it taken hold, and why isn't it going as fast as maybe we thought or hoped? Yeah, we could. I think this is what we're here to talk about, so I think it's important to get each one of your perspectives.
Completely agree. So my perspective may be different from these gentlemen's experience and what they've been through. So whatever I get involved in, I look at it as an industry. How do you move the needle in our efforts and work and operations at an industry level? So the first part of your question, I believe there's been gimmicky one-offs of a mansion in Miami by some obnoxious owner that just wants some publicity and something cool, or there's a hotel in Colorado or in Arizona. So there was nothing at an industry level with that entire hotel flag, or a residential owner that maybe owns 100 homes. So from our perspective, how do you fix that? So if you've got access to industry, so on DiamondLake's board, for example, we have the chairman of Colliers, Brandon Fugel. We work with him almost daily. Our corporate headquarters is embedded into his office. Colliers is, I think, the third largest commercial real estate firm in the world in over 68 countries. So listening to them and understanding what is their current business model. And if you talk about efficiencies and how you can do things on chain, well, then there's a big issue of what about all the brokers, right? Do you want to eliminate their jobs? I certainly don't. So how do you implement things like tokenization into a commercial real estate firm and ensure everybody can still eat? So those are the things that we have those discussions with. The other problem is I hear so much noise about assets on chain, assets on chain, assets on chain. Okay, I ask the question, do you own the asset? And I get crickets back. So from our standpoint, we want to own the asset as the operator and the manager, and working with this incredible individual and family that has tremendous experience in commercial real estate and a great pipeline. So now you have a company, hopefully a public company, that's bringing great assets onto our balance sheet. Our business model is a hybrid, selling equity, issuing debt, tokenizing that asset. So you're hitting every type of investor personality, but you're doing it with industry. So with our use case and principles and point, now you take something like that to a firm like Colliers and say, hey, here is the program that we can replicate across the nation, across multiple countries, and make sure all of your personnel and reps and consultants and all your agents can still stay intact and earn.
I want to dig into that a little bit, because I spoke to one of the larger brokers globally as well, and they're like, they know it's coming, but they don't want to basically cannibalize their existing business. So is this a scenario where it can be a this and that rather than this or that? How do you work around to where, or is it just inevitable?
Still for me?
I would love it, because you brought it up.
I did bring it up. I dropped that, Mike. Okay, so I think a couple of things are happening. You have you have people that are intimidated by this whole entire technology movement that are of a certain age too. They don't understand it, therefore they're not confident, and therefore they don't want to try to deploy it. The other thing is obviously regulation. Thankfully, in our country now with current administration, things are moving at a much rapid speed. So until the conversation changed with legislature, every company, whether public or private, was like, we are not touching that. We got enough fires to battle every day. We're not even going to even attempt throwing tokenization and digital securities into this mess until that's at least resolved. So I think those are some of the things that had pushback, but companies like SteelWave, they were planning on it. And I didn't see that in any commercial real estate firm I ever spoke with, whether private or public. Nobody was talking about it, nobody was planning for it. That's why when we teamed up, we were finishing each other's sentences.
So, Matt and Ed, from a domestic US and then a global perspective, when you're talking to folks about tokenizing real estate, what does that conversation look and sound like? What is a good opportunity versus a bad opportunity?
Well, first I want to just say that probably one of the biggest problems with tokenizing or having more assets on chain and actually getting more assets, capital formalized, is lack of education. Most of the leading real estate companies are now starting to hear about it and kind of interested in it. Initially, they were confused with capital market tokenization for securities with cryptocurrency, for example. They weren't sure if they're going to get crypto in response in terms of issuing their shares. Would they get crypto? They didn't want crypto. They wanted to know if it's something related to Bitcoin. So a lot of misconceptions about tokenized real estate until they realized that now with licensed personnel, licensed SEC broker-dealers who understand blockchain technology coming in, we're now having a chance to help them transition, to speak their language on real estate, to understand what their challenges are in terms of structuring capital, whether it be on the debt side or the equity side. And with our experience in real estate, we're able to talk to them very intelligently and without bringing any blockchain terminology. We don't even use the word blockchain, but we just talk about structuring what their needs are. Some people are looking for ways to save on taxes. Some people are looking to figure out how they can bring more international capital to the market, to themselves and to their projects. Many of them, there's a big illiquidity process problem right now. It's about $12 trillion of assets in the United States, at least institutional assets. There's about $5 trillion of illiquidity. That's the problem we're tackling right now. And the reason for the illiquidity is because interest rates have jumped up 400 basis points over the last 3-4 years, and those target exit prices just are not attainable as a whole asset being sold. When you fractionalize that asset, and when you start focusing on digital capital to invest in that asset, all of a sudden you can see a more compression on that cap rate and get to their target and help them give liquidity to their LP shareholders. Because it's a problem. If an LP shareholder invested in you 5 years ago and put $1 million or whatever into your asset, and they're still waiting to get their money back, it's really hard for them or for you to expect them to bring more capital into your next project. So this is really causing some friction in the industry in terms of getting new capital. The flywheel of real estate is not turning as fast as it used to, and we're here to help correct that problem by integrating tokenized real estate in a compliant fashion. I think that's really the bottom line. There's no conversation about crypto at all. It's a conversation about, not even a conversation about innovation. We're having a conversation about efficiency with capital markets.
Yeah, I think there's two parts to my response here. So what we've seen in the UK, for example, why is tokenization of real estate not taken off there? A lot of that conversation is around scale. So we were discussing earlier around the models in which you tokenize, the structures behind how you tokenize real estate. In the UK, that's really difficult to scale. You have to create individual SPVs for every piece of real estate. And if you want all of your properties to be on-chain, that's really difficult to manage. Bank accounts, financial statements for that, and doing that at scale is really difficult. I think obviously the market as well, which you, I guess, touched on, has made real estate a less attractive asset class in Europe. If my bank account can pay me 3.5%, 4%, and real estate is going to net me 5% a year, is that worth it? But I think our approach is very similar to what Ed's described as well, where we go in and talk to clients, and they can be governments, they can be institutions, about how can we help you solve your problems with this technology. So the Dubai government, for example, they were very clear to say that they want to open up their real estate market to more people. They want international investors to come in, and they want it to be done in a seamless way. And so tokenization can absolutely solve all of those problems. And so that's exactly what we launched with them over the last 12 months.
Mitch, as an operator, what was appealing, right? Is it because in the conversations I'm having, 95% of them, they want to raise money, right? And that's its own challenge, where potentially a better fit is folks that already owned and operated, already have the assets, where they can experience maybe those efficiencies we're talking about. But I'd be curious to hear your perspective as an operator. What was so appealing? Were you gung-ho from the get, or did you have to be won over?
I mean, look, we went into it pretty naive back in 2020. We're like, yeah, we're just going to go tokenize one of our buildings, and realize that the crypto world and the institutional real estate world don't really cross over in many arenas, right? So we stepped back and we're like, look, if we can actually go find capital who's like-minded, I think finding the liquidity behind the asset itself is the biggest issue, right? And you touched on that. You have to own the asset, have it under your operation to really get the benefit of the coin. And that's where people really stutter-stepped, I guess, right? You didn't have the institutional grade assets themselves in the space for people to come play. It was a warehouse in the Midwest, or single family homes in Kansas, right? You didn't have Andurill's campus down in Orange County, or Googleplex or stuff like that where people would want to go play. For us as operators, I think it's a form of permanent capital. We go build these super cool campuses, we get them stabilized, and then our capital partners sell them so they can recycle their capital into new ventures. For us, we'd much rather keep it on the balance sheet and sell off portions of the cash flow and build it up. So it's twofold. I think it starts out by a liquidity play for our family offices and sovereign wealths that are in the assets, and then it grows into a form of permanent capital for us to go do the cool stuff we want to do. But again, you have to have the regulation, you have to have understanding, and I think the biggest pushback was the previous administration's lack of understanding or willing to understand the technology itself. Yes, you had some bad actors, and it's funny that the biggest bad actor is the only one that left Gensler's office without a fine. So, looking back at it, I think the current administration and the people that are looking into this and running regulation understand it because they are operators themselves.
So is it fair to say we're in the midst of the largest transition of wealth in the history, right? So you got the baby boomers transitioning over to the digital natives. And the digital natives, it's their mandate. It's not necessarily it's a want, it's a need and a mandate. They want it now. They want to operate and do business wherever they are in the world, and they want same day, almost instant settlement. Go ahead.
It's like you see a next generation of asset managers with a new risk profile and a new timeline horizon, right? I think you saw that in crypto pretty quickly. You saw people throwing in, 1,000 bets and 999 of them don't hit, but one does and pays for everything. And that's why, real estate didn't seem appealing to them until the collapse of the space. Then all of a sudden, consistent 8% sounds pretty good. So I think you're starting to see that happen now. And it's happening internationally a lot more. They're just more open-minded to it. They understand the technology. I think, the Middle East and Asia are leading the push in that just because we're kind of starting 4 years behind them here in the U.S.
I agree with you saying, because I think our relationship started with father and son looking at or trying to understand tokenization, and we had that first meeting. But it has evolved. I see that there's about $40 trillion worth of real estate, or actually just assets going over from the baby boomers to the younger generation. A lot of that is real estate. And I'm starting to see a lot of owners, like we just met with a client yesterday here in New York, $3 billion family office. He had his oldest daughter with him. His wife passed away. His older daughter with him too, because she has a different perspective on how she's going to manage the family office. And looking at digital assets was a big portion of what they wanted. And so fractionalizing the real estate into shares and being able to get capital so they can keep building more product because they have a lot of entitled land was one thing, but also being able to exchange the shares of real estate for shares of certain Bitcoin or shares of certain stable coins, and even shares of certain layer one stocks that they thought made sense, because on a like-kind exchange basis, you can negotiate probably a lower basis and pay less tax. So people are thinking about how the next generation is going to manage these significant amount of assets. And I think they look at blockchain as one way to be more efficient in doing so. So that's the experience I'm seeing on and on, because like you said, the older generation who has built these assets doesn't really understand the technology that well, and they're confused, but the younger generation in their family does understand it, and they're combining together. And that's what Mitch and his father did, which I think is very, very common in the industry.
No one ever talks about it, but I think this is going to be widely used within estate planning. A lot of high net worth individuals have a tremendous amount of assets, real estate being typically a large portion of it. But I don't want to highlight that, but I want to dive a little bit more on the institutional side. Now, is the quality of the asset, typically it's going to be a Class A building or something that's going to drive the awareness, the want, the desire to have a portion of it. Is fractional ownership even appealing to the institutions? I mean, because they have all the money, they could go and buy things outright. Is that part of their play? And then how does that then trickle down to affect the upper middle market and below, because the asset has to be a quality where people actually want it?
I think institutions view this as a liquidity vehicle, right? They're going, look, I just put $400 million into a deal. That deal's a 10-year deal. 3 years from now, I want to get some liquidity behind it, pull off $30 million, go tokenize that to your retail investor. Everyone's a win-win, right? The retail investor gets access to an asset they previously wouldn't, and your institutional capital partner gets liquidity where they previously wouldn't have that. I think that's what's going to start the race, at least.
Also, access to international capital is where institutions are focusing, because, as I said, the commercial or the national investors that they pull money in have not received their return of capital, so they're a little resistant to putting in more capital into the bucket. So they're going after international investors. I mean, Asia, Middle East, a lot of them really have an affection for assets in the United States, especially the highest quality assets. And when I was at Colliers, that was really, my game changer was flying to Beijing and talking to the investors there, bringing back LOIs and getting them to make offers before a property got on the market by overpaying. But at that time, overpaying made sense because interest rates were falling and the price kept going up. So that's how they were able to get control of certain assets. And a lot of times they don't even want to be GPs. They want to come in as an LP just so they can get the return and have access to that capital. And I think right now with digital assets, it's even better for them because they can formulate that capital much faster. They don't have to worry about the minimum of $50,000 per household. They can just convert their stable coins and go ahead and purchase shares in different types of real estate. And we try to bring the highest quality real estate that the United States has to offer and the world has to offer because we know that brand sells itself. We don't have to really speak towards a brand of a Hanover company or even a SteelWave company because they know they've been doing this for a long time, have a successful track record. And so that makes it easier for us to make that introduction.
I think the idea that institutions are looking at this for liquidity is correct, but I think that's also part of the challenge and the reason why it's not taken off. Because from our perspective, from our conversations, if you've got your real estate already existing in an SPV and you can fractionalize them through traditional shares, what's the value that blockchain has added at that point? I think what we're starting to see is more utility come through from blockchains, which is then going to unlock the liquidity that people have long discussed about with real estate tokenization. So just by tokenizing something doesn't make something liquid, doesn't automatically mean you're going to have buyers. If I fractionalize it through an SPV, it's the same concept. But what you're starting to see now on chain, and the previous session was all around vaults, you've got these ecosystems that exist on chain that are allocating to on-chain assets that are hunting for yield. Real estate is a great yielding product. And so there is something really interesting there where you can plug into those pools of liquidity that now exist on chain But that market is still developing, and that wasn't always there for the institutions to be able to tap into before.
I slightly disagree a little bit. I mean, I know that you're in UK and we're in the United States, so I can disagree. But converting an asset, real estate asset, from a limited partnership structure to a security, you now have the same characteristics of a stock, and therefore you can trade like a stock. Before, you couldn't ever do that, right? So there is no really liquidity. You had to wait for the asset to be disposed of to get your capital back. But when you convert it into a stock, maybe it might not sell tomorrow, maybe it might not sell next week, but you have that ability to sell it to someone else. And to me, that's a critical fact and benefit for digital assets.
Does blockchain allow that, or could you not have done that through creating an SPV that issues shares instead?
No, converting shares from LP shares from a piece of real estate, and I'm talking about the SPV, into digital securities. They're now securities, and now brokers can have private placements to sell those securities. They can putting it onto capital markets or marketplaces like ours and advertise it for investors to buy. That is very useful for sponsors because their LP investors have no other way to get their capital back. And there are a lot of angry LP investors right now because they were hoping that 3 to 5 year window was real. And it's not because of the sponsor, it's because of the market. It can't happen, right? So being able to even sell it at a discount is important for LP investors. So I think that liquidity for a stock is the difference in terms of what we do. It may be different when you're tokenizing the land, like you said, in the UK, but when you're tokenizing the SPV into a security, it makes it very liquid. At least the possibility of liquidity is there.
So, Brian, I think you want to jump in here?
I just want to. I love everybody I speak to, and I love people's business models. So I never mean any disrespect, but I want people to start thinking about. Stop thinking about liquidity in secondary markets. And that's why we're so focused on, at least at DiamondLake, industry agnostic, diversification, real businesses, real balance sheets, amazing management. So if we're just going to stick on commercial real estate, if you look at that building, not as a transaction, and I get what you guys do and I respect it, but if you look at that building as a business, and that building is earning income from its tenants, the landlord and the building owner and the tenant need to have such a relationship and a partnership that's long-term. I've seen so many, quick example, I'm in Scottsdale, there was a Saks Fifth Avenue that was there for 30 years, and Saks is restructuring and it was leaving. If I was the landlord of that building, I would never let Saks leave. Like, what can we do to make sure you stay here another 30 years? Those are the relationships that I build with people. So if you look at the business inside of the building, and if you're tokenizing that building is earning, and it's a prime piece of real estate, and you've got great operators and management, and you're bringing in the right tenants, you're bringing in increased value, and it continues to earn. And if there's a token attached to that earnings mechanism, you want your token holder, or the right token holder, to never want to leave because they're earning so much from that token. And if they need liquidity, and you've got a rated token in the market through S&P, Moody's, or Fitch, you can borrow off of that token. That's the business model. Trying to get trading of tokens in real estate, never going to work. It's never going to work until you can go on your Charles Schwab account and buy some of these things just like you're buying stock. But if you look at a piece of real estate and you cherish that piece of real estate, you're not forced to sell that piece of real estate, you make a loop for every investor, every stakeholder, every participant in that building to say, I own that, I'm never leaving that. And if I do leave that, the operators or the asset owner should have a good business model and cash flows to say, well, if you're selling it, I'm buying it back. I want that token because I know what the value of that token is and I want it back on my balance sheet. That's what I want people to start thinking about instead of constant misconceptions on trading. It's such a mess, and that causes so much friction in
But we're not
commercial
talking about trading. We're talking about primary issuance. Primary issuance is where the GP is able to get new capital in to do business. And the LPs who want to get out can sell. If they want to hold on, they can hold on. They're not forced to trade their shares or forced to sell in the secondary market. That does exist as an option. But I think
you're right.
in terms of primary issuance is where many investors can get into that high-quality real estate they couldn't get into before. And it also allows them the option if they want to sell. You're saying if the property is doing very well, they want to hold on to it. Well, they might have somebody getting married and want to cash out for whatever reason, right? That's a possibility for them to do so. So you can't say they're going to hold on to it forever. They could, But if they want to sell, they should have that right and option to sell, just like you can sell AT&T stock or SpaceX stock.
I think something to kind of put a bridge in it is, if you're going to sell a token, you need a buyer, right? So if you don't have a buyer, there's no point in having it. And for us as an operator, that's kind of what we've seen. We've been sitting on the sidelines going, look, when someone's going to be able to buy the coin and actually have that liquidity layer, we'll start slamming real estate into the space, right? But you have to have a buyer that wants it. And the only way to have that is to have an asset that people demand. And when I say like something like that, it's like, campus that has, Neuralink in it, right? Everyone wants to touch Neuralink right now. Well, go buy the actual campus itself.
Let's talk about, so traditionally real estate is not, it's probably never going to be like a high volume trading type solution, right? But what about the data feeds? Any good data engineer will know good data in, good data out. So what about being able to do real-time nav? Because traditionally when you're looking at trying to either refinance a property, sell a property, whatever, you got to go through, you're getting inspections, you're going to get your appraisals, things like that. I do think Redstone has a solutions with some data solutions. I know there's some other folks out there that are working on real-time navs and things like that. Have you guys looked at any of those things that can maybe help propel either the act of maybe an LP wanting to get out, and so maybe there's more information that they can maybe make it more attractive for an ease of friction to be able to get out? And I think we've all been there. I'm a real estate investor. I've had some asshole investors that I want to get out, and being able to get them out without having to deal with lawyers or things like that, and it be a clean, easy transaction is quite appealing to me as a developer.
Yeah, I mean, look, I think you're going to see it coming in and revolutionizing a lot of the way the transactions are held, the back office, your waterfalls. But then it gets into, okay, well, if you have a token, you need a valuation. So how are you valuing it? What are you putting in there? You don't want to put too much stuff in there because you don't want it to fluctuate, right? What's the weather is, right? You can make it fluctuate however you want to. And I think there's a lot of groups that are kind of racing to figure that out, especially for the hard asset. It's one thing if you're tokenizing T-bills or equity or whatever. It's another thing if it's a private asset that you don't get your valuations every day.
Well, a lot of folks get into real estate as an investor for the benefits of depreciation, the tax benefits, things like that. Does tokenization impact the ability to pass on those that depreciation number?
Not right now. It does not, because of security versus a partnership.
We've got about 4.5 minutes left. I want to kind of dig into your guys' each experience, because you all have a slightly different perspective in the areas that you're operating. What are the things that are keeping you up at night? Like, what are the things that you have control over versus the things you don't have control over? And how much of this is dependent on, getting, no pun intended, the Clarity Act finally resolved? And do you think, is that something that's stopping institutions or even the individual investors in taking these actions and being more aggressive in this space?
A lot of things keep me up, but it's never been business or work. I always focus on what I can control, because everything else I can't worry about, right? I can't put that in my brain. So for us, it's just building we've been preaching this business model well before any other public company was, and during a different administration and different SEC chairman, and we did it with respect and integrity, and we never had any issues, right? So for our standpoint, we've got our flag in the sand, like a lot of other amazing businesses here, and we know this is where the market's going. And I think we, as a community, we need to really push on really sound projects and investments coming to market with really great seasoned management. Because every time there's some scum that come out and scam people, or some deplorable asset or some hack, we go 10 years back, right? And then we got to rush as fast as we can to get to where we were before that happened. So from my standpoint, I really believe that there's going to be a movement of this meme coin generation growing up, loving crypto, loving tokenization. They're going to look for more sophisticated opportunities in management and assets. So I think we're going to see a wave in that. But we just need to really come together, places like this, to educate good quality people, transparent people that share what we're doing, the good, the bad, and the ugly, and we just telling it how it is, and that we're all trying to figure this out. Nobody is an expert in this space. I don't care what they say. Nobody's an expert in this space, because even the biggest experts go out and do things and it doesn't work. So we just have to work together as a community, do great work, and protect the investor, protect our teams, protect our partners, and protect our future token holders.
I agree. I mean, my biggest thing is worries me, especially being in California, you can kind of see how crypto's got this stain on it. And, the next administration, the snapback in regulation could put us farther back pretty quickly. So it's just creating good product that people understand that gets rid of this like narrative that's kind of been attached to a lot of the crypto projects out there. And you're slowly starting to see it. But again, it's just creating good product, having high quality assets.
Have we done ourselves a disservice about talking about tokenizing real estate when traditionally you're tokenizing either the vested interest or the ownership in the entity rather than the actual real estate that it is?
I mean, look, I think either way, you're shifting the narrative away from what it used to be, which was I'm going to go buy a meme coin that's going to pop up like crazy, sell it, and get liquidity. I think as the space matures, the investor is going to get smarter and want to have the actual security behind the asset itself. And I think the people that are creating the token structures are the ones that kind of have a front row seat to that, of how you're structuring it, the way you're putting your smart contract together, what you're actually giving up.
Interoperability. I don't think we need to make sure that no one company is kind of siloed and needs to go through their rails. So interoperability is, I think, going to be really big for our industry.
Yeah, you asked what keeps us up at night. I sleep well at night and I wake up happy because I see a very strong industry is growing fast. I used to worry about where I'm going to get my customers from, but now that there's more awareness globally, people are leaning in and calling, right? And so you're getting invited to discuss their properties. We don't talk about the stable coins or the cryptocurrency. We talk about their issues, their problems, how much capital they want to raise, how do they want to tier that capital, how to price. I mean, because pricing is something that you have to kind of put a lot of thought to and figure out how you can get the highest price for your customer and who's going to pay that highest price. And so that's the things we can control, is how to structure compliantly capital for a client, but also how to figure out how to maximize the value for that client in order to reach their target.
Matt, take us home. We're going over time, but take us home on this one.
Well, firstly, it's really interesting to hear how everyone is approaching real estate tokenization in slightly different ways, and it's dependent on your jurisdictions. I think from our perspective, we work very closely with governments and the central, real estate registers. And so the thing that keeps me up at night is, bringing them on that journey with us, educating them. They are not the fastest moving. So our approach is slightly different, but it's been super interesting learning about how you guys are approaching the same problem statements on this side of the pond.
Wonderful. Well, thanks, guys. I appreciate you taking the time to share your knowledge with everyone that's here. Everyone enjoy the rest of the conference. If you have additional questions, we're happy to answer those later. So thank you.
Thank you, everybody. Thank you, Tokenize This and
Yes,
Redstone.
Thank you, Jason.